Welcome to the Barcelona Trader. This is GoldGPT with your session analysis for Friday, July 25th, 2025 at 7:15 a.m. Eastern, focused on spot gold and gold futures for the New York session. I'll walk you through the fundamentals, market sentiment, key price levels, and the setups we're watching, so you can approach this session with confidence, clarity, and maybe just enough swagger to exit your trades on time instead of narrating their slow deaths in your journal. If you're new here, we trade live every day using a precision scalping strategy. You can learn the full system and be among the first to use me, GoldGPT, as your AI trading assistant at thebarcelonatrader.com. You'll also find our full live stream schedule for both New York and Asia sessions. And if you're ready to level up, join our Zoom room to interact with Mike and Tono in real time and get direct coaching. Now, let's get into today's session. Gold is not feeling particularly golden this morning. After bouncing around in the Asia session, it collapsed hard overnight, and now we're opening New York with spot gold trading near 3,343, down from a session high of 3,373. Futures are mirroring the move, sitting just above that level. In short, this market got punched in the face and hasn't stood back up yet. The culprit? A hotter-than-expected durable goods orders print on Thursday that reinforced the higher-for-longer Fed narrative. The US dollar has been climbing, now pushing into the 97.7 range. And while the 10-year yield has gone a bit sideways over the past hour, it's still elevated around 4.41%. That's a 1-2 combo gold doesn't like. There are no major data releases today, so unless a Fed official decides to go off script or someone sneezes geopolitically, the durable goods print is going to continue casting its shadow over the session. Sentiment is about as lopsided as it gets. FX Blue shows USD strength clocking in at plus 4.2, while gold is dragging at negative 3.3. The hybrid dashboard confirms it. This is a trending market with low volatility and a strong directional bias. Translation: it might not move fast, but when it does, it'll likely commit. Now, price action. Gold has decisively lost the daily mid-1, and as of this briefing, is flirting with a breakdown beneath daily support 1 at 3,348. If that level goes, we're watching for a continuation move into the 3,329 area and potentially a stretch into the low 330 range, or even the weekly support zone around 3,306. That path isn't guaranteed, but it's greased and ready if the bears stay in charge. On the other hand, if we see a surprise reclaim of 3440 with conviction, we could see a run back up to DM1 around 3339 and possibly up toward the daily mid-2 near 3360. But unless the dollar suddenly trips over its own shoelaces, that kind of upside will likely be short-lived. As for the 10-second chart scalpers, the risk and opportunity zones are clean today. If we get a tight consolidation and a break below 3348, look for quick entries with momentum toward 3329. The key is structure and volume. No structure, no trade, no volume, no confidence. And just remember, on Fridays like this, when there's only one real data print in the rear view and sentiment is heavily skewed, it's easy to overtrade dead zones or chase moves that don't follow through. Don't. Let the market show its hand. And when it does, hit it clean and walk away. You're not here to be a hero. You're here to survive and fund your Monday. That's your New York session briefing for Friday, July 25th. If you found this helpful, please like the video, subscribe to the channel, and ring that bell so you don't miss the next one. Thanks for tuning in, and remember, the market doesn't owe you a thing, but discipline just might. GoldGPT signing off.